Hello and welcome to today's Morning Report Charter Appraisals with me, Richard Perry, market analyst at Hantec Markets on Friday, 3rd of November. It's Non-farm Payrolls Day, and what we've got is markets relatively consolidating, certainly on the Forex level anyway. Some support coming through the equity markets, but certainly in front of this payrolls numbers out later this afternoon, we've got very little real direction. Very slight air of dollar positivity, but nothing really decisive. You've seen the pound jump slightly, about 10 pips on the back of better than expected UK services PMI, but generally speaking, we're not seeing too much direction other than a bit of weakness on the Aussie. Aussie dollar coming under pressure today after retail sales for Australia came in weaker than expected. Equity markets interestingly strong on the DAX and the FTSE as the both currencies are sort of relatively weak, and you've seen Wall Street jumping higher. Interesting though that the S&P 500 really strongly moved initially to the downside on the back of tax reform, but bounced back into the close and actually closed at an all-time high, even though it wasn't an intraday high, it was an all-time closing high. But generally speaking, markets are sort of pretty much positioned fairly sort of much in consolidation in front of this payrolls report this afternoon. And what is that payrolls report going to do? Well, we've got the estimates here. 310 on the headline. That is a massive sort of bounce back really from the minus 33 that we saw last month. Unemployment at 4.2%, staying as is. Average hourly earnings dropping slightly to 2.7, but we saw a move from 2.5 to 2.9 last month, so still that would be considered a relatively decent number. Let me just show you some of these charts. So that's payrolls. Average sort of 6 month is now back at sort of around 140,000, so 300,000 would be able to sort of net off, I suppose, that minus 33 to around about where the average for the last couple of months would be. So sort of thereabouts on the average. Unemployment, as I said, has been falling, as has the underemployment as well. Watch out for the underemployment later. If that sort of drops back to 8.2%, would that be considered, again, further signs of slack in the economy? Average hourly earnings picked up sharply from 2.5% to 2.9%. Back down at 2.7% is the expectation today, with plus 0.2% for expected for the month. Average hourly earnings remains a key factor, I think, in the market's opinion on future rate hikes. So lots going on there. We've also got the ISM data. As I said, we had the UK services PMI 55.6, quite significantly ahead of expectations, 6-month high there on the services PMI for the UK. US data this afternoon, ISM non-manufacturing 58.5, so down slightly from 59.8, which was 59.8 was a very strong number last month. And then the factory orders at 2 o'clock again at 1.3% expected. But payrolls is certainly the big focus for today. Now, my chart of the day is the Aussie dollar. Now, what we have seen in the Aussie dollar and the Kiwi, actually, which I focused on yesterday, a little bit of a rebound. But today, the Aussie is coming back under pressure on the back of that retail sales disappointment for Australian economy. Now, this sort of bearing in mind we're sort of in this downtrend phase. We've sort of, if I zoom out, you can see quite solidly this. These momentum indicators corrective still on a medium-term basis, so little near-term rallies are a chance to sell, I think. Now, you'd sort of point towards this resistance band, 77.30 to 78.05, as a sort of a sell zone. You've got this downtrend that comes in around 77.80 today, so the fact that we've sort of turned back from 77.30 already with yesterday's high would suggest that the perhaps the this little rebound has already played out. But even if it does get a little bit of support, perhaps on the perception of maybe a little bit of a miss, maybe on the non-farm payrolls report. If it does get a little bit of a rebound on the back of that, the Aussie, I think it's still a chance to sell. I think these momentum indicators in the sort of trading below the moving averages all points towards selling into strength, and it looks like this market has further to go on the downside, having topped out below that 78.05 level. You'd sort of point towards sort of 250, 260 pips of downside, and that would give you sort of 75.50 area still, I think, to but at least you'd probably see a retest of 76.20, especially considering, as I said, these corrective outlooks on the momentum indicators. So looking at rallies as a chance to sell on the Aussie. You've got the resistance that came in yesterday, as I said, 77.30. Bit of a near-term pivot formed actually as well, around that 76.90 area intraday today, so watch out for that. But yeah, it looks like the sellers are sort of coming back into control once more, and rallies are a chance to sell anyway on the Aussie. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.